Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily TSLA report for Monday, June 30th, 2025. Let's take a look at the charts. To start with the big picture as usual. We'll work our way into the day itself. And this is a 5-year channel, this is a 5-year channel, top at 517.12, but it's a 5.5-year weekly chart that does show pretty well the low to mid 350s as a meaningful resistance area that until we can close above it, does allow this market to fall back in the weeks ahead. I'll get to that in a moment. But if we can close the week above 354.78, which we've yet to do since testing it about 2 months ago. We've tested it quite a bit and fallen away each time. When we tested it the first time, we did close above it on a daily basis for several days, but then fell away to close the week clearly below it. And that is an image here on the daily chart. You can see we spent several days above only to collapse back Thursday, Friday, and that maintained a short position for some of you. We'd recommend selling the low to mid 350s at the time, anticipating then bearish rotation to this 3-4 month rising channel bottom that is now at 307.54. But at the initial testing of it, it was a 2 to 3 week objective. It took about 2 to 3 days. It was in the 270s and climbing. So the way I see this market playing out is, we've got a wedge developing between 307.54 and 354.78. And which of these wins out? In other words, which side of the market we close either above 354.78 or below 307.54 will be the determining factor in terms of our directional dynamic as we move through July and even into later Q3. So 307.54, after testing yet again the low 350s early last week, has remained a 1 to 2 week target. We'll probably see that over the next few days, holding below 336.67. Having closed below this formation Thursday of last week, did set up 307.54, excuse me.
If you're finding value in this analysis, it's only a glimpse of what we offer. Your real trading edge starts at wickedstocks.com. Each week, premium members receive 2 high-probability stock picks. Each one comes with a complete trade plan, including exact entry, profit target, stop loss, and regular updates so you can manage the trade with confidence. You'll also get daily video analysis in the top traded markets, the SPY, the Triple Q, and NVIDIA, highlighting the key price levels, trends, and trade setups we're focused on. Whether you're day trading or swing trading, these insights help you zero in on the highest quality opportunities with clarity. Try it all free for 5 days. Cancel at any time.
As a 3 to 5 day objective or sooner. There's also an extreme channel bottom that did roughly contain Friday's lows. That today is at 323.59. So for the day, if we open below 323.59, that is our immediate ceiling, at least early in the day, and below which the targeted 307.54 is in reach today. We can bottom out for the week at 307.54 and round back up by the end of next week into the low to mid 350s again. As this wedge continues to narrow, these time frames go from 2 to 3 weeks, 1 to 2 week, and then pretty soon it'll be 3 to 5 days, sort of a ping pong, if you will, between the two of them. But we are in the midst of a short-term sell signal below 336.67, expecting our targeted 307.54 within the week. And if we open today below 323.59, we just might see 307.54 today. I will say that if we close today below 323.59, we will likely see tomorrow, Tuesday, the 307.54 rising 3-month channel bottom, where once again we can bottom out for the week and round up by the end of next week into the low to mid 350s. Now, if we close below 307.54, I've been mentioning how I view that as a longer term sell signal. I would expect pretty quickly, within a week or two, a retest of the 272.87 5/8 downside Fibonacci. That is a downside 5/8 from the April low against that more recent May high. We could get a decent bounce here, but the last time we tested it, it was correlated well with this rising channel bottom. So the two combined form a range of support. But in terms of a trend-defining element, I do see 307.54 as the more significant. In other words, closing below this rising channel bottom at the base of a move is a classic sell signal that would anticipate at least a retest of the low area in the lower 220s. 221.86 is the low settlement price. That's the lowest this market closed on a daily basis back in March and April when we were plotting along this area. I would call this a 3 to 5 week objective by the end of July. And I do think there's a strong case to be made. I think you can trade this, set this up. In other words, if we close below 307.54, you want to be short 1 to 2 week swing traders down to 272.87. You want to be short 3 to 5 week swing traders down to 221.86. And I do think that 2 to 3 month position traders can play the short side down into the 160s if we were to close, for instance, today below 307.54. And that could mean, for instance, you could reach for 270 strike out of the money puts that don't expire for 3 or 4 weeks. You could reach for 220, 225 strike out of the money puts that don't expire for at least, I would go at least 2 to 3 months out on the expiration on this perceived 3 to 5 week sell-off. And yes, you could reach for 160, 165 strike out of the money puts that don't expire. I would go 6 months out on that expiration on what I would consider to be a realistic 2 to 3 month sell signal into the 160s, which is, kind of right. It's not yet. You can see you've got 175 down here. Your 160s are really this line right here. That is what we would expect within 2 to 3 months of closing below 307.54. But if you wanted to play it in stair-step fashion, I don't have a problem with that. Maybe you play the short side down to 272.87. You cover your short position or a good part of it, allow the market to bounce, perhaps. And then if we break 272.87, you reload fully on your short position, then the next 1 to 3 weeks, expecting 221.86, et cetera, in stair-step fashion into the 160s. The 160.86 to 166.96 area, I don't expect to see it anytime soon, of course, but if tested, can contain selling not only through the rest of the year, but possibly through all of 26, and we can round up nicely from that area. Let's take a look at the upside one more time, and that is the 336.67 channel bottom that we closed below Thursday of last week and set off a 3 to 5 day sell signal to 307.54, which remains in effect. If we close today above 336.67, we retest tomorrow the low to mid 350s, which are once again the 351.39 50% upside retracement and the 354.78 2-year channel top that has a bearing upside as we continue through the rest of the year. And so plain and simple, if we can close the week Friday above 354.78, then I am expecting a continuation, meaningful upward continuation. Within 2 to 3 weeks, this 400.80 formation would be expected. And that is a solid 2 to 3 week swing trade. So if we close above 354.78, now on a daily basis, I'm not so crazy. I will probably give you some sort of a defining intra-week element. I don't know exactly what that would be yet. That if we settled above that, which would be higher than 354.78, would then heighten the likelihood that we would also see a weekly settlement Friday above 354.78. But bottom line, closing the week above 354.78, 400.80 becomes a 2 to 3 week target where we can top out on a weekly basis. And 517.12 becomes a 3 to 5 month, I'd say 6 month anyway, objective if we can close the week above 354.78. Until then, it is a two-sided battle right now between 307.54 and 354.78. And we have significant directional continuation in the respective direction if we close outside of that area. I'm going to leave it at that for Monday's Daily Tesla Report. You have a great day.